Uh, there's a lot to talk about today. I thought initially what would be good would be just to start with my basic overview. I know by some of your questions, it appears that many have not, in fact, read the 2026 Outlook that I published a few weeks ago. So I would encourage you to do that. Some of your questions are, in fact, answered within that, and it does have a very thorough overview as a chart book, just covering equities and some of the sector rotation and really what I expect out of technology, as well as uh, really some of the thoughts on FX and just looking across the board at interest rates and crypto. I'll spend a little bit of time on crypto. I know a lot of the questions remain very heavily focused there, and currently, which is that the S&P as of today is set to make a new all-time high. That's certainly a good thing. However, we know that we still have quite a bit of lagging behavior by QQQ, which really has not lived up to how the S&P is doing. So you see S&P as of today officially above 69.32 would in fact represent a new all-time high close. We're in the process of, I think, getting up above 69.46. That'll probably take us up to 7,000 initially. I don't know if this is going to be a straight shot, and I do suspect there will be some backing and filling, and a lot of that has to do with some of the short-term cycles that really pinpoint the period of time between really the 13th and the 17th of January, which should be an important turn. Now, I think that's going to be a bottom. So I think even on a breakout that we're seeing right now, of course, in the Dow Jones Transports, which the media is not talking about, but certainly very relevant to how it affects industrials. Really, the breakout in mid caps, I think, is also quite important. But everybody continues to be focused on Qs for understandable reasons for how it really dominates S&P. We know that breadth is about 3 to 2 positive, not a great move back to new all-time highs yet in breadth, and a lot of that has to do with just the fact that QQQ still really has not broken out. We want to see it really getting up above, I would say 625.52, the prior peaks from the day after Christmas on the 26th. I think that would be very constructive and should be able to lead us up to probably near 655 or so into the middle part of February. I think that's what can happen. But as with always, I don't think it's going to be a straight V line by any stretch. I think we'll have a breakout attempt, we'll back and fill, and then we'll start to turn up over the next month. It should be a slow grind, but one that can help sort of the broader market start to regain some strength after really what has been a pretty noticeable drop off in breadth really between July and late November. We have seen some decent recovery in many of the sectors. I think it's been very positive what's happened in financials and industrials, and certainly the recovery in tech is almost always very important. My sector rotation for this year shows tech as being a neutral. And for some of those that need to review that, please see my annual outlook. But I do still maintain an overweight, and industrials really is my favorite sector right now. Love financials. Energy is going to be a work in progress, but I do suspect that energy can be an overweight for the year. I think that likely starts between mid and late February, where energy officially bottoms. So I still think that energy probably has one final pullback to new lows, and I've discussed a few of those thoughts in prior reports with regards to what crude should do. Bottom line is that, getting a great broader market move right now, and this is something really that needs to be um, reemphasized because the market is actually in better shape to start the year this year than it was last year. Last year, of course, we had pretty noticeable decline. We've had now three Santa Claus rally periods that have now failed in a row. That's never happened before. So this year, unfortunately, did not work. Last year didn't work. The prior year didn't work. But last year we did see much more signs of broader breadth deterioration, I think, into year end that gave a pretty noticeable warning sign, I think, heading into the peak that we saw in February and, of course, the subsequent decline into April. Here's the mid cap 400. So we did, break back out to new all-time highs today. It's very encouraging. And also, of course, with the Dow, also seeing, very strong movement back to new highs in the Dow Jones. So this is the S&P. One second. So the Dow has had an even stronger push up in recent days. We are continuing to see some pretty good strength in healthcare. We'll talk about that a little bit. That is a defensive sector, but I think many parts of healthcare, like medical devices and biotech, stand out as being pretty good areas for long exposure over the next month. Thereafter, I would probably switch to more of a pharma type bent, where I would favor some of the more defensive areas within healthcare. But the group overall, still does not look like a true overweight to me. I do sense that we are still going to need to consolidate, parts of healthcare which remain under pressure. And so this is going to be still an area for selectivity, and we can talk a little bit more about that. RSP is probably, the main area of interest for, many that don't just have a pure S&P focus, and that a lot of the movement in industrials, financials have really helped to lift equated S&P back to new all-time highs and have done it in a very strong fashion. So very, very encouraging there. And I think that's also a really great sign. And in Bitcoin, after some settling, I do think we get up to 103 to 106. That's where this initial move off the lows would be sort of extrapolated and an alternate move that has some Fibonacci properties to the first one should take that higher. Now, if you just look at pure Fibonacci of the entire move down since October, that gets you right to near 103.3 as being a 50% retracement. After we hit that, we'll have to look at some of the DeMark signals on Bitcoin and Ethereum and else, but I think that it's going to be wise to sell into strength, in my view, into mid to late January, and think that we're probably going to pull back. Where do we get? Well, the bigger picture, I think we probably sell off initially down to an area right near the low 70s. That would really dovetail with where Bitcoin at least has peaked out over, really the last 5 years. Just looking back since, I guess, 2021 has been an important area, really anywhere between 64 and say 73,000. So there's an area there that does have some real importance. When you also measure the length of just the move since 2022, that's also right around a 50% retracement. However, I'm not certain that we end there. If anything, how this likely is going to shape up is that we have the first move down likely could very well be complete. And now we're starting a sort of a secondary or a B wave. And from there, it likely is going to flush into a 5-wave decline. Now, that probably takes us down under that 71. And if it does, that could get us down to even like 60,000 or so. You really want to take this first move down and measure this based on however high we get. Let's say we get to 103 and then look down. That would get us down to right near 58,000, where these waves would be exactly equal. And that's just one of my own tools that I use to sort of forecast where I think prices are going to go and how to really predict that. And so you always want to compare one wave in both price and time to a prior wave to be able to fine tune. And when you overlay DeMark with that in cycles, you can get even more accurate. And I'll leave that up to you to figure that out. Ethereum, let's talk about that a little bit. So,